SK hynix raises a record $26.5 billion in historic US IPO, South Korean. That single number resets the tech playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. That's what SK hynix just raised in a single US IPO, the largest ever for a South Korean company. This isn't a routine capital raise. This is a deliberate, massive bet on one specific technology, HBM, or high bandwidth memory. And it just reshaped the entire semiconductor supply chain in ways most people haven't realized yet. Let's be clear about the context first. HBM is the memory that powers AI systems. Without it, your GPUs run at a fraction of their capacity. NVIDIA knows this. TSMC knows this. Every AI company burning through compute knows this. But for the last 2 years, there's been a bottleneck. HBM production couldn't keep pace with demand. SK hynix controlled roughly 45% of the global HBM market. Samsung had the rest. And neither could manufacture fast enough to meet the explosion in AI training and inference. That bottleneck cost money. Real money. AI companies paid premiums for HBM access. Some paid 2 to 3 times the standard chip cost just to secure supply. NVIDIA's margins compressed because they had to source memory from constrained suppliers. The entire AI infrastructure build stalled at points because memory was the limiting reagent, not compute. Now SK hynix has $26.5 billion in fresh capital, and they've explicitly stated their plan: scale HBM manufacturing in the United States. They're building capacity. Massive capacity. This is the inverse of the last 2 years. Instead of scarcity driving prices up, we're about to see capacity flooding the market. HBM prices will compress. That compression ripples backwards to GPU costs, training budgets, and deployment timelines for every AI company downstream. But here's where it gets more interesting. This IPO also signals something about geopolitics that investors are only now pricing in. The US has been pushing for onshore semiconductor manufacturing. The CHIPS Act, the subsidies, the rhetoric about supply chain sovereignty. SK hynix just called the bluff and said, "We'll do it. We'll build in the US. We'll raise the capital in the US. We'll tie ourselves closer to the American market and ecosystem." That's a massive shift in how Korean semiconductor companies think about geography and investment. For India specifically, this creates 2 parallel effects. First, the cost of AI adoption just dropped. Indian startups and enterprises that were priced out of AI workloads because HBM was scarce and expensive now have a path to affordability. Training costs fall. Inference costs fall. That changes what's possible for Indian companies competing in global AI markets. Second, India's semiconductor ambitions, the plans to build fabs, the Semicon India initiatives, they just got validated and pressured at once. If SK hynix can raise $26 billion and build in the US, India's government will face questions about why the same capital flows aren't materializing domestically. The contrarian angle is worth noting too. Some analysts will frame this as SK hynix betting on continued AI demand. But the real story is they're betting on margin compression. They're raising money today at peak AI hype to build capacity for 2026 and 2027, when HBM prices are lower and volumes are higher. It's a classic commoditization play. First mover advantages in commodity memory are thin. SK hynix is betting they can execute faster than Samsung and that volume will outweigh margin pressure. What changes next? Watch 3 signals. First, HBM pricing data over the next 12 months. If SK hynix's capex translates to real production, spot prices for HBM modules should flatten or decline by Q3 2025. Second, NVIDIA's gross margin guidance. If HBM costs drop, NVIDIA's input costs fall, and they'll either pass savings to customers or pocket them. The margin line tells you which. Third, watch Samsung's response. They control the other half of HBM's supply. They'll either match SK hynix's capex plans or risk losing volume share in a contracting market. Their next earnings call or investor update will be the moment they signal their move. This deal matters because it resolves a critical constraint in AI infrastructure. Scarcity created friction. SK hynix just decided to eliminate that friction by flooding the market with supply. That's bullish for every company downstream, every AI company, every cloud provider, every enterprise rolling out LLM applications. It's bearish for component margins and good for adoption velocity. Watch this one closely. The next chapter of AI infrastructure economics is being written right now. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.